What is going on? Investing on this channel, and today I wanted to talk to you about all the crazy nonsense going on in the market. Today the market is up. Yesterday the market was up, but yet nothing in the economy has fundamentally changed. Do not be fooled. Today we're going to look at some charts, and I'm going to show you why right now is not the moment that you want to be diving all in. We're also going to look at some news, an article about crypto, something specifically dealing with Bitcoin. We're going to talk about something Kathy Wood from ARK Invest has been doing, and I want to hear what you guys got to say as well. So as you guys comment, we'll address those comments as well. If you like this type of content, please hit that subscribe button. Please hit that like button. It truly helps out the channel. But with all that said, let's jump right into it. The first thing we're going to look at, as always, is we're going to look at what the market is doing right now currently. So currently we have the Dow is up. As you can see, it is up 1.44%. The S&P 500 is up 1.37%. You have the NASDAQ up 1.30%. It's above that 10,000 threshold. The S&P 500 is currently above that 3,666 that we've been talking about. And that's a very, very key level. The last few weeks, we're going to look at it, but we've been hovering between that 3,500 and that 3,800 level. So those are good levels of support and resistance to pay attention to. Right now, the VIX, and this is something we're going to look at a chart of this as well, because I look at this a lot. The VIX is still above 30. It is up 31.07%. You have gold that is down today and oil that is down today. Let's look at some of the market action. The top stocks right now are Carnival, and this is inside the S&P 500. You have Solar Edge, Norwegian Cruise Lines, Target Corporation, and Salesforce is getting a bump up because companies just said they had a stake in them. So, obviously that's a bullish news for them. On the opposite side, you can see we have Hasbro, we have Moderna, and then we have Micron and Intel, which are both semiconductor companies, and you have Regeneron. So at the bottom of the S&P 500, you have some health companies, some semiconductor stocks. What about the NASDAQ? We have Pinduoduo, which is a Chinese company. We have Okta, CrowdStrike, DocuSign, and Palo Alto that are leading the top. And then we have the bottom, Moderna still, Micron, Intel, Regeneron, NetEase still at the bottom there. In the Dow, we currently have Salesforce Inc. leading the way there. Goldman Sachs, one of those banks. American Express is up. JP Morgan, another one of those banks, is up. Walmart, which is a good company to have. It's like a recession kind of company you'd like to have. They don't really move up or down that much. And they have a lot of bullish things going in their favor when there's a recession, as well as them offering a little dividend, which is probably more than you're going to be making in your regular bank account. On the bottom of the Dow, we have Intel, Johnson & Johnson, Amgen, Chevron, and United Health. Now, specifically, let's look at that 10-year bond. It is down today, is down below 4%. You have that 30-year is slightly up right now. It's above 4%. So those are good indicators to look at. We have oil, which is down, still below that $90 mark. We have gold and silver, as we talked about. And that's it for that. So let's look at the S&P 500 specifically and dive into it right now. So we're going to look at some very good stuff today. Let's look at the 3-month chart on the S&P 500. And as you can see here, we clearly have been hitting higher highs and higher lows. So keep in mind, that's something that is not ever bullish. All right. You have the high right here, lower high, lower high, lower high, lower high, lower high. So we're not really moving anywhere. But what have you seen on the way down? You've seen a boost up here, percentage, about 2% bullishness, and then a drop, 1% bullishness, and then drop. Then you have some more 5% upside, then drop. Here you have 10% upside, and then since then we've done nothing but drop. Then you get these bullish spots right here, and then what happens next? You drop. So what has been happening lately? The last 2 days, we've been moving up. All right, let's look at a 5-day chart. As you can see, we had a big reversal where we moved up. Here we jumped up on the 17th, and today we jumped up again. However, we're still now trending back downwards. So we're losing some of that momentum. All right. So that's something good to keep an eye on. This is what the S&P 500 has done today. Okay. We opened about 3,757, and then we're currently almost at the low of the day. We're at 37.34. Okay. So keep an eye on that. All right. Let's look at some timeline factors here. So this is the history of the S&P 500, and this is just some big moments that we can look at here. So we hit on this date, we had 9.1 inflation, which was on the 18th of, let's say, July. On the 18th of July, we had some hot inflation data. Then we had on the 28th of July, the Jerome Powell said we were going to raise by 75 blips. The market moved up on that because the market kind of expected that was going to happen. All right. Then the jolt, which is the job openings, were reported, and they were better than expected at that moment in time. All right. Then you had the PPI paints a pretty picture. So that was a indicator right there, but that was pretty much the top at that moment. Then Powell came out and he had a more hawkish view on the market, and he didn't like that. When he made his previous comment, we went up from there. All right. When he raised the 75 basis points, he basically said that we were going to be, the market should not be going up. He was surprised that the market kept going up. So the next time he had a chance to talk, he said, we're going to be very hawkish instead of being dovish. And he let the market know, like, we're going to have pain in the market. Okay. And this was on Monday, the 29th of August. Then we had the bear market. That's when a lot of people started talking about going into the bear market. And then Jerome Powell says we can't stop and we won't stop. So basically, even if inflation peaks, like, he's not going to start quantitative easing, which means lowering the Fed funds rate, which he's been raising 75 points at a time. He's saying, they're going to go high and stay there. So if they go to 4% on the Fed funds rate, they're going to stay there for a while until for sure we know the economy is going back into a great spot. All right. Then we had 9 trillion gone, the first decline in 10 years of 9 trillion gone from the market. Then we had the Fed's fave measure is up. Then we had the jolts again. We had the labor market, which still showed it was strong, which was not good. And then we had the high core price index, which again was not bullish news. But since then, the market has continued to go up, and it makes no absolute sense on that. All right, so let's look at some of the technical indicators on the S&P 500, and this helps you with your stock analysis. All right, so on a one-day chart, where are we? The oscillators are telling us that the market is in a neutral stance. So you should not be going ham, buying or selling. All right. Next, we have the summary of the entire S&P 500. It's in neutral as well. Should we buy or should we sell? No, it's neutral right now. The moving averages are telling us to sell, and that's because we've been below the 365-day moving average, so the 1-year moving average, and we're below the 252-day moving average. So think about that. We're below all those moving averages, and that's giving us a sell indicator. But it's sell on strength, not sell whenever, sell at this moment. When we have these bear market rallies, when we have 5% up, it's letting you know that this is your time to offload some of those stocks that you are not comfortable with and have been dropping a lot more than you feel comfortable with. All right. So keep an eye on that. And that's what this is telling you at the moment. All right. So let's look at the VIX. And this is the big indicator that I've been looking at. The VIX is still above 30. Even on this big bullish run we've had in the last 2 days, the VIX has not broken beneath 30. And actually, it's moving back up. All right. So this is not an opportunity for you to be buying something. 30 has been an indicator for you to sell and offload a lot of the stocks in your portfolio that are weighing you down and you feel have a lot more downside to go. If you have profits, it's your opportunity to take some of those profits. All right. But this is not your opportunity to get in there and start, buying everything right now either, because what I want to see is at least a 40 handle on the SBOE volatility index. So that means that this 30 would turn into 40. So that's what I want to see. All right. So as you can see, we're slightly above, we're right there. And that's what I want you guys to take from this chart right here. But let's look at what Bitcoin, some news here is really short. Bitcoin fails to produce one block for over an hour. And it took more than an hour to mine a block of Bitcoin on Monday, leaving thousands of transactions stuck in an unconfirmed state. According to on-chain data from several block explorers, the interval between the two latest blocks mined by Foundry USA and Luxor was 85 minutes. According to Mempool, over 13,000 transactions were pending before the latest block was mined. Last week, Bitcoin underwent a difficult adjustment to ensure block confirmations keep taking place every 10 minutes. With mining difficulty surging to 35.6 trillion, it becomes more expensive to mine Bitcoin, which heaps pressure on a mining industry that is dealing with soaring energy prices and a crypto bear market. So the miners out there are not making enough money back right now, so they're having to shut down a lot of their operation in order to stay afloat and keep making money during this environment. The amount of Bitcoin they are mining is not giving them enough to pay all of their bills, which their electric bill is high because if you know anything about rig mining, it takes up a lot of pressure. And then you have some of these states that charge even more on top of that. So just keep that in mind. Let's talk about Cathie Wood. Cathie Wood doubles down on two innovation stocks. And if you don't know who Cathie Wood is, she's some people idolize her. She's very, very stuck in her ways. I'm not saying that's a good thing or a bad thing, but let's say what the article says. Not many hedge fund managers have ignited as much controversy as Cathie Wood. The founder of ARK Invest has built her brand on running against the crowd. From her early embrace of tech stocks to her outspoken political conservatism, Cathie Wood has always been something of a lightning rod. Wood is staking her reputation and fortune on the belief that new technologies, especially the way that new technologies will interact with each other, are going to completely transform our world. We believe, and just as she always says that, we believe, because she has a lot of researchers that work for her in different special fields. We believe, and just to give some numbers, that truly disruptive innovation will scale from 7 trillion in market cap today to 210 trillion by 2030, from less than 10% of the broad-based public equity market to more than 60. And so if you're short innovation, you're going to be missing some of these unbelievable opportunities. Now, to be fair, we should note that the Wood flagship fund is down 78%. We should also note that the same ETF has surged over 300% the year after the vid-based market crash of 2020. All right, so let's take a closer look at the two innovation stocks. One of the innovation stocks she's talking about here is UiPath, and we'll start with UiPath, a company specializing in robotic processes automation using a combination of artificial intelligence and machine learning to create automated software bots to take over the digital world's boring and repetitive ordinary tasks. A look at the company's quarterly financial release from quarter 2 of fiscal year 2023 and the quarter ending on July 31 shows the underlying strength of UiPath's offerings. The company had a top line of 242.2 million and 24% increase in 12 months. Its annual recurring revenue, ARR, by 44% year over year. So basically, they're doing well financially. At the same time, Path shares have fallen 74%. So if you're buying this company, you are buying it really at I'm not saying the bottom, because I'm not saying anything has hit the bottom, but you're definitely 74% from the top if you're purchasing the stock. This gives her a total of 42 million shares in Path, a stake that is worth well over 475 million at current prices. Wood is not only on the path, she has Mike Turnin. He's also taken an upbeat stance on the stock. writing of its prospects going forward. So that's one. You have some people that are very, very bullish on UiPath. If you guys want me to do a video on this specific stock right here, just let me know in the comments below, and I'll definitely get on there and we'll make a video talking specifically about everything, do an in-depth coverage on this specific stock right here. Right now, the analysts are saying that it's a moderate buy, and the past stock prediction, the high for this stock is currently being predicted as 30. The low is currently being predicted as 40. So, you can have a 20% decrease from here, or you can have almost a 70% increase from here based on these different target prices. All right. Let's look at the next one. The next one is a therapeutics company. And before I even get into what she's going to say about it, I'm going to tell you to be very, very careful with these. These are very speculative companies, but let's see what she's got to say about it. The second Kathy Wood pick, we'll look at it, is Verve Therapeutics, an early clinical stage biopharma firm with a focus on cardiovascular disease. And this one is ticker VERV. According to the World Health Organization, cardiovascular disease, which kills almost 18 million people globally every year, is the world's leading cause of premature death. And currently, the company has 2 drug candidates in its pipeline. The first of these is the Verve 101, and it has recently entered into the clinical trial stage, and patient dosing has begun the Heart-1 clinical trial in New Zealand. The drug candidate is a novel agent, a gene editing machine designed to turn off the PCSK9 gene in the liver and reduce the production of the disease-driving low-density lipoprotein cholesterol. The second drug candidate, Verve 201, is a proposed treatment from improving the body's natural regulation. This gene is involved in the regulation of lipids and offers a potential pathway for the treatment of hyperlipidemia. On the financial front, Verve is still pre-revenue, which means they are not making money yet. And in 2Q22, the company ran a net loss of 40.9 million. So not only are they making money, they are losing money. As you can see, they lost 40.9 million. Verve reported having 595 million cash on hand, giving it a clear runway to conduct operations until 2025. So they'll be alive until at least 2025 based on the current cash burn rate, which means the amount of money that they're burning per year. They expect to be operational if, they are still around. They would be around to at least 2025. In the meantime, Kathy Wood has been taking large purchases of Verve shares. In September, she bought 831,000 shares, and then she bought 321,000 shares in another one of her ETFs. And then she totally owns about 2.37 million shares through Arc Genomic. Wood's total Verve holding through all the companies, through all the funds, is 3,229,000, and it's worth over 98 million. Is it a good buy? Don Gone Hey believes so, but I'm not sure who that guy is, so I'm not sure how much you want to take his word into account. But he says, we think catalysts like the Verve 101 and its clinical data will drive shares. We plan on reassessing our long-term thesis in due time, but for now, our diligence is on the upcoming catalyst. And the Verve 101 and the 201 add to their 1 to 2 year outlook. All right. So with these companies, they are always dependent on one of these, one of their things that they're trying to produce and put into the market, getting approved by the FDA. When they get approved, the stocks rocket. But if they don't get approved, the stocks plummet. So it's kind of a bet on if they're going to get approved or not. Currently, they have a consensus rating, which is a strong buy, and the price prediction, currently it's $53, but the price prediction is a high of 75 or a low of 36. So you can have high upside, not even a double your money, or you can have some low downside and may never get that money back if the company goes broke. All right, so keep that in mind. The last article I'm going to talk to you about is just something, if you have children, this one I thought was important, has nothing to do with investing, but we also want to conserve money as well. So something to keep in mind, Halloween candy prices are skyrocketing, and here's how much it'll cost this year. As Halloween approaches, the cost of candy continues to surge by more than 13%, inflation, obviously. in the US is last September. That makes it more expensive than you're probably planning to budget this year. The average household says it's planning to spend nearly $30 million on Halloween candy. With costs rising, prices for Halloween candy could be closer to $35 this year. That's only $5 more than average, but unexpected costs are always significant. A price increase of around 13% bears out when you compare prices of bulk Halloween candy since 2021. The rate of price increases has nearly doubled since June, climbing by 2% just last month alone. And this is away from the article, but just think about supply and demand. If a lot of people are going out there and buying candy during this time, there's a lot of demand, which means, if the supply is not meeting that demand, then obviously the price of the candy is going to go up. So you're going to be paying even more for it. The CPI index for sugar and sugar substitutes has risen by 17.1 since last year, which means that it's even making it more expensive to make the candy. To make up for the difference in candy prices, consider purchasing Halloween candy with more than 200 pieces per bag. So if you are going to buy, try to buy at least bags that have 200 pieces per bag. They tend to be cheaper on the per piece basis when compared with similar count bags. That works out to 74 cents per piece rather than 88 cents per piece, respectively. And if you don't want to keep the extra pieces, you can always share the cost with friends and family or donate some to a local children's hospital or shelter. All right, so some good news there. There's alternatives, there's ways to save money there. And this channel is not just about capital appreciation. On this channel, we also care about accumulation and the preservation of our capital. All right. So just some news there. I'd like to keep you guys in the know on what's going on. The whole purpose of this video was to let you guys know that right now is not the opportunity to jump in because you see the market moving up. And a lot of times human nature wants us to buy when the market is green, but that goes against everything that an investor is supposed to do. You have to be patient. You have to think about what's going on. And when you see the prices skyrocketing or even dropping substantially, you want to ask yourself, has anything fundamentally changed in the economy at all in the world? We still know about what's going on in Ukraine. That hasn't changed. We still know about the Fed funds rate being increased 75% at the next meeting, possibly again in December. We still know that inflation is above 8%. Like none of that has changed yet. And we have elections coming up soon. That's another catalyst to look forward to. But my suspicion is that we're going to get a positive result in the market after that. So right now is nothing but good. If you have a long-term view, then yes, this is a perfect time to start getting into the market. Okay. The 10-year outlook from here is bananas. We have nothing to go but up. And if you're in the market for that long, then this day-to-day volatility should not even bother you at all. Take a long-term outlook. Stop thinking about the tomorrow or what you're going to do this evening. Like your biggest priority as an investor is, what is my time horizon for investing? And if it's 10 years, 20 years from now, you should be buying into those companies that you feel are going to be strong 10 years from now, 20 years from now. Or if your time horizon is 5 years, same thing. Just do whatever applies to you. All right. I really appreciate you guys sticking with me till the end. You guys are awesome. Make sure you hit that like button. Hit a comment down below. I love reading your guys' comments. Give me if you guys want specific stocks or cryptocurrencies that you guys want me to investigate, let me know in the comments below and I will get those for you. All right. If you like this content, as always, invest in me and press that like button, invest in yourself and smash that subscribe button. It costs you nothing. Until next time.